Hello, the marketers. Good morning. Good morning, the Daily Money Marketers. This is Yusuf, the host of the Daily Money Market. Again, we meet again. It's Friday today, the 3rd of November. You know, the biggest day. It's actually first week of November. And again, it's a first day that we're going to see the numbers in terms of NFP. So it's the biggest day in the market. Uh, there's gonna be the release of NFP today around 2:30, 3 o'clock from US, which is we actually waiting for those numbers. So before we get to those numbers, we want to see how the market is actually looking at particular time. What are we going to look into, into NFP? What exactly is driving the market, and what do we think? What exactly the Federal Reserve, they're actually thinking about, NFP. So a couple of news, couple of stories that we have to check it out. I think the biggest one in terms of NFP is talking about the dollar. The dollar, they are actually easing out to traders bet before the Fed done with the rates in terms of the hiking the rates. So the dollar stayed on the back foot on Friday, which is today, as it was on a course for weekly declining against the basket of the currency of the traders waged that the U.S. Federal Reserve was mostly likely to done with the rate increase, lifting in a risk sentiment. So pretty much, the economists and the marketers, they think that this is the end of the U.S. Fed to increase the hike. They're going to be paused a little bit. So the dollar index, which measures the US currency against the six rivals, was at least the 106.22, not far from the 1 week lower on 105.80. It hit on Thursday. The index is opposed to clock on 0.3% drop for the week, just its third week on a losers since July. So we can see that the dollar index, the index that actually measures the value of United States dollar, it's called the US index, the dollar index. The dollar index, it was actually at 105, 106, it drops all the way to 105. Actually 0.3% drop from where it was. So it shows that the dollar itself, it's starting giving a little bit of stability, it's start giving a little bit of strong. That is why the marketers, they're thinking that at particular time there will be a pause, or it will be the end of the hike in terms of the US dollar. So it's a big day actually today. So we're gonna have to look into couple of news. I think one of the news that I saw in the morning, it's one of the big company of shipping company, Maersk. So Maersk actually released the third quarter earnings. Today they were actually 4.4% growth in terms of the fourth quarter earnings. The reason why the economists, they always pay attention to companies like Maersk, because of it's the biggest shipping company. This is the company that actually the more movement it has, it actually means the more product are moving from one region to another region. So the more product who are moving from one region to another region, that's business being translated from that region to another region. So the more shipping of those ship happening, the better for the economy, the better for the company of Maersk. That's why it reported 4.4% growth on the third quarter earnings of Maersk. So right, so we're looking to another story. So what to watch in Friday for job reports? How long can the labor market keep, hiking, or keep the interest rate down or below? So the Economist survey by the Wall Street Journal estimated the employees added 170,000 jobs in October, down from the surprising strong for 336,000 new jobs in September. The strike against Detroit automakers could could account for some of the decline because of the striking workers aren't account on the payrolls. Economists see the unemployment rate holding steady at 3.8%. So that's what the Wall Street Journal is saying. It's talking about the economists. They're thinking that because of on October the jobs were estimated to get to 170,000, and now on September they rose all the way up to 336,000. New jobs to added on September, but because of this month, because of there was a strike against Detroit, the automakers. It's one of the biggest company in the US that produced the cars. So there was a long strike, people striking. They want to increase the wages. So we are actually, the economists, they're actually anticipating that maybe it will have a little bit of growth of 3.8% in terms of the job numbers, in terms of number of people that are going to be employed. So easing the hiking and the wage growth could be the sign that the economy is starting to slow after the red hot of summer. On Wednesday, the Federal Reserve Chair Jerome Powell pointed to the cooling labor market as one of the results the central bank might not need to raise the rate further. The Labor Department is set to release the October employment report at 8:30 a.m. estimated time on Friday, which is today, which is in Central Africa time. We're looking at 2:30 p.m. That's what we're looking. So yeah, easing of the hike. That's actually the biggest story today. That a lot of economists, they're thinking that they're going to ease the hike today, and it's good if they ease the hike. Maybe we're expecting also oil or petrol to actually drop down a little bit. If they ease the hike, probably here in South Africa as well, you will see Lesesha Khanyago coming up also and saying that we are putting the hike on a pause. That is good to people who are actually borrowing money to the banks, and that is good to banks because of in order them to make money, they need to keep on borrowing people's money so that they can earn that interest, which is the profit of what they are actually making. So the easing or stopping of the hiking, it will actually drive a lot of industry in terms of the economy. It will drive the housing industry. People, they can now be able to comfortably to say that, okay, let's go and purchase houses. Motor industries, they can be able now to start manufacturing more cars because more people, they will be able to to afford to buy the cars. So all right, let's look into another big news before the hiking, before the jobs report. Okay, so because of the economists that thinking that there will be a pause or a stop of the hiking, I'm seeing also WTI having some story. Oil price on steady, on a track for the second straight week of the losses, right? On a 2 weeks they were on a losses. So oil price were little changed on a Friday, heading for their second straight week of the losses at the US Central Bank. Left the door open for the possible future rate hike and worries that the Middle East conflict will disrupt the supply of the easing. So both the benchmarks had gained more than $2 a barrel on Thursday. Brent was on a track to fall about 4% in the week, while WTI looking to set to close down at 3.5%. So the geopolitical concerns remain in a focus as an Israel Israel forces on a Thursday invaded the Gaza city, the Gaza Strip main city, in their assault of Hamas, the military said, but the Palestinians military group resist their drive with a hit and run attack from the underground tunnel. The White House said it was exploring a series of pausing in the Israel-Hamas conflict to help people of safely exit Gaza and allow humanitarian aid to get in. They retired its opposition for full ceasefire. So big news coming from the WTI there. So yeah, the Hong Kong leads against in Asia as a key economic data comes out of across the region. This is another story that comes out today earlier in the morning, confirming by CNBC news. So actually, the headline it says Hong Kong leads against in Asia as a key economic data comes out of across the region. So Asia Pacific market rose at the end of the week with the investors accessing a fresh round of the data for more clues on the health of the business activities through the region. The Chinese service sectors expanded a slightly faster pace in October with the Caxin service purchasing managers index at 50.4, just above September reading of 50.2. So the Hong Kong private sector activate contracted a further in October as a new business included uh, that from a mainland China continues to fall according to survey by the S&P Global. So S&P it's one of the companies that measures the value of the economy about the certain sector or certain area in the world. So the Hong Kong Sing Index strengthened to 2.83%, while the Chinese CSI 300 roses all the way to 0.89%. The South Korea COPS rose to 1.8% to close at 2,368, while the Kosdaq was up to 1.19%. So just to finish up how the market is looking at the particular time, because we are actually anticipating the NFP coming in a couple of hours time today. When we look at the USDT is sitting at 33,861. Definitely they're anticipating to push a little bit up to 34,000. 34,038. Maybe it will get to that level before it start making the decision where exactly to go. WTI sitting at $82 per barrel. $82 per barrel at the moment. Gold right now it's sitting at 1,987. It's coming all the way from 1,990 during the week, which is close to 2,000, the highest mark. Anticipating to drop a little bit to 1,977, the way I think it might drop today after the NFP news release report. In that way, it actually shows that the dollar it's getting the strength. That means the gold as a safe haven, it will start losing a little bit of momentum. Bitcoin roses all the way up to 34,433. So, ladies and gentlemen, thank you very much for tuning in. This is Yusuf from the Daily Money Market. Enjoy.